Well, let's turn our attention to the chemical space. Well, most chemical companies have seen an uptick in stock prices of the last few days. That's been driven by increasing in pricing of key chemicals and expectations that Chinese demand is recovering. To help us analyze what's going on ground, Mr. Rajendra V Gogri, the chairman and managing director at Aarti Industries, joins us on the show. Hi, Mr. Gogri. Good morning. Thanks so much for joining in. Well, Mr. Gogri, you tell us, what is your reading? There has been a big surge in chemical prices, but we understand it's not really backed by demand. Is it because input costs have gone up? How do you see this playing out?
Yeah, I think overall demands have now shown increase. So I think from this second quarter onwards, we see the higher volume for most of the discretionary products. And I think agrochemical also segment also the volumes are now looking up for the sector.
So, Mr. Gogri, you're saying that demand has increased in the month of August itself in comparison to what you saw, say, in the previous month or the previous quarter?
Yeah, overall, I think demand has recovered. August onwards, but different products, there will be a different cycle. But in general, I think overall there is an increase.
Okay. What does that mean, Mr. Gogri? Could you quantify that? To give us some extent, has it improved by 10%, 15%, 20%? When you say it has improved, what's the degree of improvement?
Yeah, it will be range of about 10%, on an average, you can say that, those kind of increase should be there in this quarter.
So demand in Q2 has gone up by about 10% on an average across products?
Yes.
Okay, that's interesting. What about prices? There's been a big surge in chemical prices as well. What is the situation right now compared to what it was, say, a few months ago?
Prices generally, we have a pass-through model. So, all the raw material prices generally pass through. So, I think the volumes are more critical for us in general.
Okay. So if prices are a pass-through and volumes are more critical, can you tell us what is the kind of, since demand has picked up, what is the kind of growth that you are looking at in FY24 compared to what you've seen in FY23? Both on the volume and top line front?
Yeah, you see the first quarter was, quite impacted for entire chemical industry in general, not only in India and globally. So we had a degrowth of almost 30% YOY in the Q1. So we see that, Q2 onwards positive growth over Q1. And overall, I think this year, we'll see that try to hit the previous year number.
Okay.
As far as EBITDA is concerned.
Okay, so top line will be more or less flattish at around 6,600 crores odd.
Yeah, top line is more function of the raw material prices.
Got it. Yeah. What about the EBITDA number, Mr. Gogri? For the next year, that's for 2025, you're looking at taking the EBITDA number to around 1,700 crores. But in FY24, what will it likely to be?
Yeah, FY24 still, how the entire this demand growth curve moves up in second, third, fourth quarter. So that will be the determining factor. So more or less, we try to be more flattish on that. Substantial growth should come up in FY25.
Okay, and what is the margin band we should look at then? The first quarter you've done margins of close to around 14% or 14.2%. You expect margins to improve from here on?
Yeah, I think margin as a percentage generally, again, based on raw material prices, so we generally don't track much on the margin front overall.
Okay, got it. Mr. Gogri, sorry, just to rewind, you said Q2 volume should be better than Q1, and that 10% increase in volumes that the average increase, that's Q2 volume should be about 10% higher, Y on Y, right? That's the way to look at it?
Yeah, QOQ, it will be more of over a Q1 number.
Okay, so Q2 volume should be about 10% higher, Q and Q.
Yes.
Okay. Just a quick word on the discretionary segment, which is about, I think, 50% of your overall revenues. Could you, and you started by saying that you're seeing some better demand for those products. Can you give us some more color? Do you expect it to hold? What has led to this increase in demand revival? Any specific one-off factors or anything of that sort? Or is this going to be on a repair kind of trajectory? Will get better and better? Go on.
So basically, this was mainly some demand slowdown as well as inventory correction because of the global interest rate increase. And previous year, there was some accumulation of inventory, so which correction is taking place. So once the inventory correction from product to product gets over, we are seeing the growth in this demand for discretionary products.
When will this inventory complete rundown happen? I mean, your best estimate?
I think by Q4 we should be near normal by Q4 for most of the products.
Okay, and this is a global kind of a sort of view, right? I mean, it's global increase has been high. So
it's a
March
global
of 20, Sorry, go on.
Because we have direct and indirect also export, like some of our product are then subsequently exported. So this is a global inventory correction mainly because of the US interest rate. Interest rate in dollar terms have increased.
Okay. I wanted to talk a little bit about the balance sheet as well. You're sitting on around 2,600 crores of debt. Do you have any plans to bring it down?
No, we are continuing with our investments about 2,500 to 3,000 crores in FY24 and 25. So we'll see some increase in debt further, and then afterwards, I think it will start flattening and coming down.
So how much will your debt go up by, say, in the next 12 to 18 months?
Yeah, it will be upward of 3,000.
Upward of 3,000 crores. Okay. You have some capex as well, right, in some of the new products and the existing products as well. Can you tell us what is the total capex plan over the next 12 months?
Yeah, this FY24 and 25 combined around 2,500 to 3,000 crore is the capex. What we are looking
Okay.
at.
All right. Mr. Gogri, what was about your capacity utilization level? I think it was much lower in Q1. If things have improved, what are you functioning at currently, and do you see that improving?
Yeah, well, as I mentioned, about 10% in overall volume increase, and I think...
as a percentage, utilization levels, in comparison to what you can normally do?
Actually, we have been adding capacity. Our nitrochlorobenzene capacity also expanded in month of July. So it will be difficult to give a specific percentage because we have a very wide product range.
Okay. Got it. Sir, just one last question. What Sonia said about capex, and you gave us that number over FY24-25. No reconsideration, right? All of this is committed kind of capex, and this is in a way already work in progress.
Yes, because the long-term, India story is we are very confident that, there is a demand appetite from India. And a lot of these products are both import substitute as well as for export market, and they are growing in both agro and pharma. So we are very confident as far as the long-term demand from India.
Okay. This inventory build-up and then slow correction of those inventories, drawdown of those inventories, you would have seen in earlier years as well. Right now, you're telling us that it should be normal, inventory across the board should be normal by fourth quarter, by the end of the fourth quarter. What happens after that when inventory is normalized? I mean, what have you seen in previous cycles, sir?
So then, it will be more from the end consumer demand, so that will be of reach to that level, like agrochemicals should more or less become normal. And on discretionary also, I think the end consumer demand also should get more or less normalized. I think US interest rate also should peak in this financial year. The interest rate also maybe should start tapering off in FY25. So I think FY25 should become more or less normal.
Okay. Just one final question from my end. This Dicamba product, there was some contract cancellation that you went through, so that became a bit troublesome for the company. But can you tell us what is the outlook now? How much money have you put into this already? And what are the strategies to revive this plant?
Actually, that product demand is still an issue. So we are just looking at, next couple of quarters, we'll see, how much we'll be able to utilize that plant, or we should repurpose that plant for something else. So that is under, evaluation right now.
But what about the deficit in monsoon out here? Isn't it going to hurt you?
Actually, most of our agrochemical segment is more for global markets. So Indian monsoon is not going to be much impact for us.
Okay. Great. Thanks for clearing the air, sir, on that. And good to hear that at least demand is improving. We were wondering whether or not, we had an IFL analyst who told us that maybe demand is not that strong. We'll have to wait for clarity on that. But as per you, as you're telling us, that if volumes have improved by 10% on a quarter-to-quarter basis, that's definitely good news. Thanks so much, Mr. Gogri, for stopping by and giving us all of those details. Well, time to slip